My mental model for this particular cycle is the everything, everywhere, all at once cycle. Because if we think about it, $67 billion went into VC, into the space in 2020 and 2021. That money has been given out to founders who are building all sorts of applications and projects and everything else. Some of them will be infrastructure layer, some will be applications layer, and everything in between. And if you see the focus of where most of these teams are working on, it's kind of everywhere. So we're seeing the asset management, the fiat world companies are building on rails from crypto land. So, this is Franklin Templeton. This is all of these people looking at tokenizing real world assets. I think that starts, the first wave of that starts. Then we're seeing at the other far end of the spectrum is everybody's focused on gaming because there's a huge audience there. So somebody's going to crack gaming in some respects. And pretty much every protocol has got teams working on that. We've got in the middle, things like compressed NFTs and Solana, I think are a much bigger deal than people understand because I think it allows for ticketing. And ticketing is at scale consumer application of blockchain, of which you don't need to know it's blockchain, which is what the space has been waiting for. So I think it's more the applications of technologies than technologies. I think we've also got the identity idea that's, there's WorldCoin, there's a few people who've started in that space, and then using zero knowledge proofs, which came around in the last cycle, the applications layer from that. So I'm just thinking it's actually going to be broader than people imagine. And it's going to be more inclusive because we've now got this trade deal, the ETFs, because I think, we've got the Bitcoin one certainly coming, and it's a pretty high chance we'll get the ETH one as well. We're seeing a much earlier ramp in the cycle than we've seen in the past, which is very interesting. It's very rare to be this strong this early in the cycle. Now, we are front-running some of the capital flows, and so there's probably some correction that happens by the rumor sell the fact. But I think if the space continues like this and we start getting monetary easing and the other conditions that tend to jumpstart the business cycle again, then we should see a very strong 2024 and most likely a strong 2025. The business cycles have been almost like clockwork, 2-year up cycles, 1 year peaking, 1 year down. And that corresponds. What's amazing is the Bitcoin halving cycle is the same as the debt refi cycle, which is, I think, what drives everything. It's the same as the election cycle. They're all the same thing. So, if that continues to repeat, then it should go until 2026 when that should be a bear market year. But, let's see. So I am obviously very bullish. For retail, it's just price action, and what's likely to happen is the moment the Bitcoin ETF is launched, the market will focus on front-running the ETH ETF. If the previous front-running made money, they'll do it again. So retail will get very interested. And, ETH's a broad, deep ecosystem, and people are happy to get exposure to it. The institutions, it depends whether they give the yields of ETH in the ETF or not. If not, a lot of the institutions would prefer to own ETH itself because then they can stake it and get yield. Because if you don't give them yield, some asset manager who launches the ETF's going to get rich. BlackRock, they'll make all the money because they'll get the ETH staking yield and they don't give it to the ETF holder. And we've seen that very commonly in ETFs in the past. So I think that's the thing, because when I speak to institutions, they get ETH because it's just like, it's a broader based thing and we get a yield so we can just sit on it. The people who are going to add an ETH ETF into their portfolio are reasonably advanced, or they're RIAs because they got retail clients who want it. The people who are much more cautious, but they want crypto exposure, will definitely go for Bitcoin. So I think there's a level of sophistication that means that they would most likely ask the question is, how do I get the yield? So Ethereum is broad, deep, and has no career risk in building on it. So it's the establishment. It's like, if you want to build in this space, that's the easiest place to go. The density of talent, the density of applications, the density of knowledge is immense. So how can you not be bullish on that, right? That's always going to attract people. It's always going to create a rich and vibrant ecosystem. Solana is kind of the new kid on the block, but they've managed to solve one of the problems that ETH was struggling with, which was speed and cost. So two of those, they've managed to solve without compromising security. So, okay, that's interesting. So that's why we've seen a lot of people start building on Solana. We've seen a very, very vibrant ecosystem being built. And so ETH had to solve that with layer 2s, essentially. Well, it doesn't have to happen in Solana. But there's two big system developments in Solana that really means that it has to play catch up in value terms, I think. Doesn't mean it has to be the same size as ETH or bigger than ETH. None of those. It's just, the rate of change of value accrual comes quite quickly. It's FireDancer, which most people aren't aware of yet. But FireDancer is the validator built by Jump Trading that essentially rebuilds Solana in a different language from the ground up. What they've done is double the security by having these two validators on the network. And in testing, it's had 1 million TPS. So this is of an order of magnitude different. Why does 1 million TPS matter? Because Solana's pretty fast as it is. It's because it matters, and why it's being built by Jump Trading is high-frequency traders use fiber optic cables, and their constraint is the speed of light. And they're like, well, if we want exchanges to go decentralized and be able to cope with the traditional financial markets, you're going to need to get to this speed. That's what this is about. And that opens up a whole bunch of use cases. So I see the vibrancy of the Solana developer network. I also think the UX of Solana overall is just nicer. It's just an easier place to hang out. And so, the applications built on Solana just seem just a little bit easier. And so the comparison, Chris Bernisky talks about this as well, it's like Android versus Apple. It's like Solana feels like Apple. It's a closed system, but it's very slick, very good, will create great loyalty. Ethereum is much broader, much more open in terms of other things that can be built on top of it. But I just think there's a big catch-up in valuation terms of the Solana network versus ETH network. Should it be a multi-$100 billion ecosystem? Could it be? Probably. Could ETH be a $1 trillion plus ecosystem? For sure. I'm not sure that the pecking order changes. Well, I'm still a bit partial to the ETH flips Bitcoin pecking order because of the number of use cases and network activity measured in different ways. But who knows? Doesn't really matter. Most NFTs are actually not assets you own. They point to a place in the database for where the asset is stored. Inscriptions are on the chain. And so this is going to have its own value for different things, where provenance is absolutely crucial and something could never take away, a database can't go over, a server can't go over, something that loses the primary source of the information that the smart contract is holding.